Welcome back, guys. We are still in the Eastern Cape paper, and now we are focusing on question number 2. Remember, we are not doing everything, we're just touching some interesting aspects that are in the paper. After the Eastern Cape paper, we're going to go again to another province paper before we write our exam on the 16th. So, as we are looking at this Eastern Cape paper, one of the interesting questions was question number 2, which is our cash flow statement. And then to begin with, there were some theory questions, and then after that they required that we do note number 7 and then some other calculations. This note is a very common note that examiners love so much, so I would encourage you to practice this note before you go and write your examinations, because we have been seeing this note being tested almost in every exam. So please do not go to the exam center not knowing this note. Okay, so to begin with, you were given information that was in the extract of the statement of financial position. So I've already have that information in the answer book already. So you have your 4 million here, and then you have your 5,852,000, and then you have your 300,000 shares there. But let's read information D, and then we can see how we can complete this note. So I'm going to try to be as slow as possible so that you may benefit from this video. All right, so it says here at the beginning, the authorized share capital consists of 2.1 million shares. This is very important because bullet number 2 will depend on this bullet number 1. Bullet number 2 then says, on 1 May, 70% of the authorized shares were in issue. So on 1 May, we had issued 70% of this authorized, which is your 2.1 million. That means, let's see how much are those shares. So you're coming here and you're now saying it was 2.1 million, and then we have issued 70% of that. That means in issue there was 1,470,000 shares. That is what bullet number 2 is saying. So we'll then come here, then we'll now say 1,470,000 shares in issue at the beginning. All right, then they go on to say on bullet number 3, 300,000 additional shares were issued. That one, but they did not tell us how much we received from that issue. But that should not be a problem. Let's see what bullet number 4 then says. So I want to encourage you, as you do this note, do not start fighting with it. Allow all the information to be taken in before you can start struggling. Let's see what information number 4 says. It says, on 30 September, an interim dividend was paid. Okay, so this may not assist us here. Let's see what bullet number 5 says. 230,000 shares were repurchased. Okay, so we know that when shares are repurchased, we put brackets here. So I'm going to come here and say 230,000. Already I know if I had 1,470,000 at the beginning, I also issued another 300,000, and then I repurchased 230,000. I can get the number of shares here at the bottom then. And if you have your calculator close, you will see that it is 1,540,000. Are you still following me? Now, once you have that, you can then get the average price that was paid on the repurchase of shares here. How do you do that? You simply take your 5,852,000. So I'm going to come here and I'm going to say 5,852,000. Then you divide it by the number of shares here, which is 1,540,000. Then the average price, therefore, is going to be your 3 Rand 80. So I'm going to come here and then I'm going to say 3 Rand 80. So you then say your 230,000 shares which was repurchased, the average price was 3 rand 80. Do you still remember how I got the 3 rand 80? I simply divided these amounts at the end. Why? Because the repurchase was the last thing that happened in this financial year. If there was an issue after the repurchase, the story would have changed completely. Okay, so I was able to do this because the repurchase was the last aspect here. So I'll now say my 230 multiplied by 3 rand 80, that gives me 874,000. 874,000. Remember, repurchase is in bracket. So now I can get that one that I was missing earlier on. You guys know how to do this then. You simply do the opposite, isn't it? Or you swap the signs. Or you say when you go up, you minus. Either way, you now get this amount here. If you say 5,852,000 plus 874,000, which is this one, minus 4,704,000, you still get your 2,022,000. That is what we get from the issue of shares. Okay, let's see. I think I still have about 5 more minutes before I can end this 10-minute video. I think so far we've used 4 minutes. Let's see if we can use those minutes to do 2.2.2. Okay, it says here calculate tax paid. All right, so if you've been following me, you would have seen by now that I'm a bit biased towards the ledger account. But in today's class, I'm going to do the ledger account. Then I'm going to do also the adding of the line method. Okay, so let's see if we can calculate the tax paid. The tax paid. All right, to do the tax paid, if I were doing the ledger account, let me quickly bring my whiteboard so I can show you how you can do that one there. So here is my T account, and we want to calculate my tax paid. So I'm just going to call this my tax account. Then I'm going to come here. I am told that in 2022, my income tax was a credit balance. So I'm just going to bring it to the credit side. Balance brought down on the credit side, 36,600. Okay, there we go. And then the balance at the end, it's a debit balance. That means it comes here. So I'm going to say the balance at the end is 21,270. But for it to be BD, it had to be CD here. Balance carried down, 21,270. Income tax will always be on the credit side. And income tax, here we're told that the income tax rate is 30%. The income tax rate is 30%. And what we're given here is net profit after tax. So that makes this one 70%. All right? That makes that one 70%. So if we want the income tax, we are now saying what we want is the 30. What we have is 70. Multiply by 637, 630. How much does that give you? I think it should give you income tax of 273,270. So to get the tax paid, you're simply adding all of these ones. Once you add all of those ones, then it gives you the tax paid, which is 331,140. That is how you get your tax paid. You need to do more practice, whereby maybe here you have a credit and here you have a debit, so that you can see how this changes around. But if I am to show you the other method, as I was saying, it is the line method. We are now saying at the beginning of the year, credit means we're owing. It is a liability. All right, so we're owing 36. We want to know how much we have paid. We're owing 36,600. And at the beginning of the year, it is the responsibility of the business that they pay off any amount that was owing to SARS. So we would consider that this was paid. And then we will now come and say the income tax for the year. Remember, we have already calculated that one, where we got your 200 and 73 270, 273 270. So we would also come here and we would add your 273 270, which was the income tax for the year. But we are then told that at the end of the year, the balance is now debit, which is your 21 270. That simply means we paid more. So that simply means we come here, then we say again, plus 21 270. Then the total again will still be 331 140. That gives you your tax paid. All right. If you want to see how we can do the dividends paid, please watch out for the next video. It's coming up in a second.